Hello, welcome to the Speculation Lab. Recently, a very popular trading indicator caught my attention. It's said to be the ultimate version of MACD. Not only can it identify trends and divergences, but it also has a unique feature. When the price is in a consolidation range, the fluctuation of the indicator becomes very minimal, sometimes even forming a perfectly flat line. It makes it crystal clear whether the market is trending or consolidating, effectively filtering out false breakout signals and offering more low-risk trading opportunities. Next, I will share 2 high-profitable trading strategies. Make sure to hit the subscribe button and stay till the end, as this is content you definitely don't want to miss. As usual, details of the TradingView indicators discussed will be listed in the video description below. The first strategy involves the use of the Impulse MACD indicator. To set this up, open the indicator search bar in TradingView, enter Impulse MACD, favorite it, and add it to your chart. Set the color of the impulse line to green and change its style to a line chart. The impulse histo should be red and in a bar chart style, with the signal line in yellow and also in a line chart style. A common use of the Impulse MACD is to observe the crossover points between the green impulse line and the yellow signal line to identify a bullish or bearish trend. If these 2 lines flatten near the zero line, it indicates that the market is consolidating, suggesting a reduction in trading frequency while waiting for other opportunities. However, this method can often lead to false signals. To mitigate losses, we manually add overbought and oversold lines to the Impulse MACD indicator. The steps are straightforward. First, select the horizontal line tool from the sidebar. Then, zoom into the chart and visually identify a position that previous bearish crossovers have rarely reached and draw a horizontal line there. This position is somewhat subjective but easy to choose, indicating a probability of reversal due to overextended volume. Finally, draw an oversold line at the same value in the opposite direction. Now, the overbought and oversold areas are marked. Let's explain the trading rules with an example using the 1-hour chart of Bitcoin USD. For a bullish scenario, first, mark the oversold and overbought areas in an appropriate position on the Impulse MACD. Second, the green impulse line in the oversold area should cross above the yellow signal line, forming a bullish crossover. The candlestick corresponding to this crossover is the key candlestick. The closing price of this key candlestick is our entry point. Set the stop loss below this key candlestick or near the low of the previous swing. For profit taking, use a tiered approach, like exiting a portion at a 1-to-1 risk-reward ratio and holding the rest for higher profits. For a bearish scenario, simply reverse these rules. First, mark the oversold and overbought areas appropriately on the Impulse MACD. Second, the green impulse line in the overbought area should cross below the yellow signal line, forming a bearish crossover. Enter at the closing price of the candlestick corresponding to this crossover with the stop loss set above this key candlestick or near the high of the previous swing, and use a tiered approach for profit taking. Since this strategy only involves the Impulse MACD indicator, it is highly adaptable. You can also integrate its characteristics into your existing trading systems. For instance, consider going long when a bullish crossover occurs near a key support level or short when a bearish crossover occurs near a key resistance level. The resonance of corroborating indicators can greatly enhance trade stability, as relying on a single indicator can offer a one-sided view of the market. It's like solving a case with multiple pieces of evidence: surveillance, testimonies, physical evidence, forensics, etc. all contribute to a more accurate identification of a suspect. The second strategy for Impulse MACD involves 2 TradingView indicators. First, find the Impulse MACD in your indicator favorites and add it to the chart. Change the impulse line to a bar chart style and set the impulse histo to blue, also in a bar chart style, with the signal line in yellow and in a line chart style. Next, open the indicator search bar, enter volume-based support and resistance zones, favorite it, and add it to your chart. This indicator is based on volume for identifying support and resistance zones. It can display up to 4 different time frames simultaneously, but for the sake of clarity, you can set it according to your needs. For instance, if you typically trade on the 1-hour time frame, you can set the indicator to only show support and resistance for the 4-hour and daily charts, disabling the 3rd and 4th time frames. These are the 2 tools we'll be using. Now let's understand the trading strategy with an example using the 1-hour Bitcoin USD chart. For a bullish scenario, first, the Impulse MACD indicator's bar chart shows green bars below the zero line. Second, the candlestick corresponding to the green bar must retrace to the support zone. When both conditions are met, this candlestick is our key candlestick. The closing price of this key candlestick is our entry point. Set the stop loss below the swing low or the support area. For profit taking, use a tiered approach, exiting a portion at a 1-to-1 risk-reward ratio and holding the remainder until it reaches the resistance above or another key level. For a bearish scenario. First, the Impulse MACD Indicators bar chart shows yellow bars above the zero line. Second, the candlestick corresponding to the yellow bar must retrace to the resistance zone. When both conditions are met, this candlestick is our key candlestick. The closing price of this key candlestick is our entry point. Set the stop loss above the swing high or the resistance area and use a tiered approach for profit taking. That's it for this session. I've revealed 2 profitable Impulse MACD strategies. If you're considering using them, be sure to backtest your trades over at least 500 times and compile trading data to build trust and understanding in the strategy. Trading is not an instant success. It requires constant review, optimization, and real-life application to achieve stable profits step by step. Alright, make sure to check if you've clicked the subscribe button so as not to miss out on more profitable trading strategies. Wishing you a good morning, good afternoon, and good evening. Goodbye.